Thursday's market closes, we were lower. Let me try that again. 3, 2, and 1. Thursday's market closes mostly lower in the livestock, but a higher day in the grains. Joining us to visit about that, we have Darren Fry with Water Street Solutions. Soybeans continue to be the leader in the grain complex, led by the weather market, or pushed by weather anyways. And so how high do you think we're going to go there? I think that's the question on all farmers' minds.
Well, the beans are being led by a strong product market. We know that weather is inducing that rally as well and supporting it. I think that we have a real situation going on in meal. Everybody's trying to figure out what is going on there. But I just think that we've reduced the crush overall here and in Argentina. A lot of places going down for maintenance, getting toward the end of the year. A lot of people couldn't originate the beans. And you combine that with a strong weather event, and I think you got beans going higher, concerned about what final yields will be. But also, we haven't gotten really that much bearish news around what the Feds did or what the GDP did. I mean, we're just disregarding that, and we're kind of starting to trade our own balance sheet again as some of that macro pressure is coming off.
And so what do you think that means longer term here? The fact that, we have this GDP number, it looks like we're digesting that quite well and whatnot.
Yeah, I think the GDP is a concern, but it could be a shallow recession. I mean, 2 quarters in a row, you are in a recession. I know Powell talked about that. Chairman Powell talked about that yesterday, but we see we're in a recession, but it could be shallow because of a strong job market, and we just don't last long in that recession, and then we go higher again. I think the biggest thing is maybe we don't have as much tightening by the Feds because we are being impacted right now by the consumption of some of these high-priced products like gasoline, food, and the things that have happened to us. And so maybe that lack of tightening or lessening the tightening is going to help us recover quicker. And with a strong job market, we could be out and, coming up and out of here as we get toward fall.
So I want to go back to weather because soybeans were made in August and the weather not looking very cooperative. And so how much do you think we're shaving off this yield if it stays dry, and what does that do to the balance sheets?
Well, that's a great question because I think it's going to affect beans, but it'll also impact corn, different stages of the plant's life. But I think you could have weather threatening enough here in the soybeans that we're going to push the yield down toward the 50 mark. I mean, we're only at 51 and a half. I think that was reasonable here a week ago. But hey, if the next 2 or 3 weeks pan out like the weather forecast says, you could be pushing on 50 pretty quick. As far as corn, you'll affect the last part of pollination. And we know that's some of the northern states, the upper Midwest, the northern plains. And that's where it's going to be really hot over the next week or two. And so if you hurt any of that pollination or the onset of grain fill and you speed that plant up, you're going to have a grain fill issue. So, we could push yields in corn down to 172 pretty easy or even towards 170. So it really is going to depend, Michelle, how long this lasts and how intense it really is. So 2 weeks from now, we'll have a better handle. But I think that's the fear that the market is trying to assess and put some weather premium in.
Yeah, and markets are always anticipatory. And so if we're trying to put weather premium in, how high do you think corn and soybeans need to go?
Well, the soybeans could push upwards of $15. I'm kind of looking at $14.75, but corn, maybe $6.40, $6.50. I doubt we get much higher than that, but we could go to $6.75. That's very possible. I think wheat, Chicago wheat would be $9.50, $9.75 area. Kansas City, up above 10, 10 and a quarter, and Minneapolis maybe in that $10.50 area.
But wheat right now is really playing a follower's role, isn't it?
It really is. We're still trying to figure out what's going to happen in Russia and Ukraine. And obviously, we're cheap. The soft red winter wheat here out of the U.S. is the cheapest in the world, and milling wheat out of EU is cheap. But we got to see what Russia and Ukraine do and how much demand that we have that moves from there to here because of their situation. And I think people are still holding the hope out for some type of grain corridor. And I just am I'm very doubtful of that for a lot of reasons, but we'll see what happens. I hope so, because a lot of people need that food.
Let's go back and talk about exports as well this morning, which we had cancellations on beans once again, and I'm sure there's some shifting into new crop in that category. But overall, have we done demand destruction here because the exports continue to be slow?
Yeah, the exports are slow. I think some of that is just because Brazil stepped back in both on beans and corn, and they've gotten the lion's share of that. I do think that's going to change as we approach fall. I think that Europe Their crop is in real decline. I mean, they're going to have a 20% off a trend, I think. I mean, that crop could easily be 58 to 60 million metric tons. Some are saying even less than that on corn. They're going to gobble up what they can out of Brazil as they are harvesting the safrinha crop. But when that dries up, they'll have to turn, the other buyers in the world will have to turn to us. They won't have the Brazilian corn. And so I think we're going to really firm up as we get past October and get our harvest underway, get some of that locked up in the bin. And so I'm looking for strong basis and maybe inverted markets again after November. So I think that business will come here. It just right now we're not seeing it.
Let's move over to the cattle market. A down day there, and I'm sure the feed grains being higher certainly did not help the feeder market. But with that combined with some lower cash trade this week here, do you think maybe that market is trying to put a little top in, or has it topped?
I don't think so. I think the hogs and the cattle and the feeder cattle are going to go higher. The feeder cattle have the most headwinds, especially if fats aren't up, because obviously corn is. And so if fats aren't performing well, corn's up, feeders are going to get hit. But I still think those markets are going to firm up as we move past summer into fall and beyond. So I really like them for higher.
Hog market, August got above 120 today. The funds have been pushing that thing, but it's really been a function of this super hot cash market. How long do you think that will last? I mean, and can the August kind of start pulling those back months along with it at some point?
I think it can, and I'm not bearish any of those months. I think breaks are for buying, and a guy that's going to want to hedge, a producer, is going to have to be patient. I still think you have ups. There's nothing wrong with the chart. Technically, we can go higher. Sometimes these markets consolidate and do cause building longer than we like, but when they start to unfold and release that energy, we see a big move. And I think that move is coming. It's just a little bit deferred. And hey, if we stave off some type of recession and we see the economy stay, where it is or even firm up, we could really see that all come together fourth quarter, first quarter, second quarter of next year.
All right. Well, thanks for joining us, Darren Fry, Water Street Solutions.
Thanks for having me.